Richard Harris joining now. He's Chief Executive Port Shelter Investment Management. Richard, very good morning and great to have you on NDTV Profit as always. Always a pleasure to speak with you. Want to get your take first on the inflation data that has come out, and it's completely in line, which is great, but it also tells us that for the last 4 months, inflation has been inching up higher. And does it really bolster the kind of optimism we had on the quantum of rate cuts in 2025?
Well, I think, unfortunately, the figures were the kind of figures that everybody pretty well expected. So I don't really think it leads us to any particular decisions about where we're going to go. My guess is we probably will see a small rate cut in December, only because it's been flagged for so long. It's probably politically expedient for that to happen. And let's face it, 25 basis points isn't really going to do an awful lot. So I think the Fed will probably err on that side. But I don't think markets will be too surprised either way, especially coming into the holiday season.
So 25 basis points won't be too big a deal, which is why I skipped that part of December 17th, 18th completely to all of 2025. That's where the real question and the real action moves now, isn't it, Richard? Pretty clear now that maybe Jerome Powell will stay on. Trump has at least said that he has no intention of replacing him. I don't know if Fed Chair Powell himself wants to move out. And then the question about where inflation settles. What would give you some comfort as far as inflation is concerned?
Well, I think it's quite difficult to see inflation really going down. I mean, if Trump is going to bring on his policies like immigration, like tariffs, they're all very inflationary. And the biggest one is if he's likely to look at reducing taxes. That's also very inflationary too, because he's going to have to borrow money. So that's likely to put pressure on interest rates to go up. So I think the picture actually is biased very much more towards interest rates, if not rising, they certainly won't fall next year. Yes, economies may slow down. We may see interest rates come down as a result of that. But fundamentally, I think interest rates won't really be falling, which makes 2025, I think, perhaps a rather darker outlook than we've seen in 2024.
Richard, good morning. It's also Samina joining in. Keeping the mother market as the backdrop for 2025, what is the trade going to be? Is it structurally bullish trading calls, investment ideas for India? And how does China stack up? Because the measures that are picking up, industrial growth is expected to show a positive reading later today. The India-China debate, where would you put incremental capital in 2025?
Well, I think people have obviously followed the India ride-up quite substantially. China, of course, is still yet to come through, but I think it will. I think the authorities have basically got an attitude now, which is that we'll do what it takes. The Chinese economy really has been very sluggish for about 3 years now. It hasn't really recovered from COVID. I think that's been a huge disappointment, not only for the authorities, but for the man in the street. So I think we are going to see more stimulus put into the Chinese economy to develop it. That may well distract investors from, if you like, looking at India. That's a possibility. But I do see the two markets are different. And I do see a sense around the world that people are now saying, hold on, the BRICS aren't all the same. We've got China, which is a very different market and probably will run a very different course to the US next year. And then we've got India, which is a very different market. So I somehow think that, BRICS was a nice, convenient concept when these countries were developing. But it's tough to say either China or India are actually still developing. They've got very advanced industries in many areas and often equal to the West. So I think that investors look as if they are now starting to distinguish between the two. So I think it would not be unusual to see both China and India do well under that scenario. The key thing, of course, is what's the global scenario going to do, and that's going to affect all of us.
Richard, what's 2025 going to look like for crude? It's been a fantastic year for gold. Would you still consider long trades on gold? And also, the base metal universe, constructive on that world, given that if China is going to look good, metals would be the first beneficiaries, I would imagine.
Well, you're right, but are we talking about a China which is producing goods for the world and growing like a weed as it did back in the early 11s and the noughties, or are we looking at a China that's much more maintenance? Are we looking at a China where we're seeing that kind of fundamental underlying growth more at 3%, like the US and Europe? And I think that's more likely, in which case we're unlikely to see the big spurts in base metals that we saw in previous years because the demand may be so strong. So there may be some underpinning, but that underpinning may only serve to support prices, which may be falling off due to lack of demand in Europe and the US. In terms of gold, gold always moves in big jumps, about every 5 years. Now, that's a simplistic view, but we did have gold really pretty steady and not moving when inflation started to go up. And then it had that big jump more recently. So that's a little bit more difficult to figure. I think gold, if we see inflation move up in the States, yes, we may see a movement in the price there because obviously it's related to the US dollars. But I also think that if you're looking at the geopolitical situation, it's pretty tough to say, well, we've got two wars and now a new state that's trying to work out whether it's a rogue state or a failed state in the Middle East. That's Syria. There's a lot of geopolitics out there, and that could affect the gold price as well.
So gold, crude, will see its bit of uncertainty. I think for crude, demand is the biggest issue more than anything else, as we've seen through this year. Thank you so much, Richard Harris, for speaking with us this morning and just giving us a sense of what we see, of course, for the end of 2024 and the year to come.